Georgia, Mr. Price, for 2 minutes.
Thank you, Mr. Chairman. It's extremely important for us to be discussing Lehman Brothers bankruptcy in the context of the full committee, but I would also suggest and like to draw attention to the fact that we still haven't had a hearing on the collapse of Bear Stearns, which undeniably shaped public expectations for a government bailout of Lehman Brothers. On April 7, 2008, Ranking Member Baucus and 16 members of this committee sent a letter to the chairman requesting a hearing specifically on Bear Stearns, which has not yet occurred. We've not had a hearing focused specifically on the events that led to the Lehman bankruptcy, derivatives, or the SEC's now defunct Consolidated Supervised Entities Program, which supervised Lehman and the 4 other independent investment banks. In the wake of Bear Stearns and leading up to the bankruptcy of Lehman, many investors continued to purchase bonds or commercial paper issued by Lehman Brothers. In a normal functioning market without suspicion of government backing or bailouts, investors would have likely been much more cautious investing elsewhere and spreading their risk. Protecting risk seems to be the primary issue that has brought us here today. Our nation has a system that, though painful, works extremely well in times of great challenge. It's the bankruptcy system, and I would suggest that the Lehman bankruptcy actually unfolded relatively smoothly. While many would like to attribute this unprecedented event to the inadequacies of the bankruptcy system, the more accurate culprit is the government's unpredictable meddling in the market. This certainly contributed more than any insufficiencies within the bankruptcy code. In the situation with Lehman Brothers, the government created an unreasonable expectation that led to increased economic turmoil. Part of getting this country back on track is getting the government out of the market and out of the business of eliminating risk. Investments involve risk and reward. If we take away all the risk, there will be no reward for anyone, no opportunity for anyone, and no reason to invest in the future. We should look at that.